order filled.
Alright, what's good everyone? So in this video we're overall going to be breaking down the entire day of Friday, August 22nd, 2025. I taken two trades this day. First of which was a long in the AIM session before Powell had pumped the market. The second of which was a short that I taken after Powell was done, or technically while he was still speaking, but after we had expanded. And overall, just going to be breaking both of those down. Ultimately, what had led me to reach my threshold to withdraw $40,000 from Apex. And just for reference, these were the trades. Here was the short position that I taken on the Apex accounts. And here is the long position that I had taken on a MFFU account. I'd also take this on my live account just with reduced sizing. And in fact, just for proof, of course, I always love to show proof because a lot of these guys who, you know, teach other people, they show trades but they don't show actual accounts. But anyways, here was the execution on my personal live account, and overall this is just going to be a breakdown for the entire day, a lot of which is going to be in reference to the higher time frame. Overall, share what I posted publicly and privately in terms of higher time frame, because I've been posting that the price is going to expand higher throughout this entire week. I was saying to keep a bullish bias regardless of what we're doing short term, keep a bullish bias based off of the higher time frame. And overall, just going to give you guys insight into why I was so bullish biased based off of Power 3 market maker models and just the foundational core of the market. Anyways, going to be doing that. Before I do that, I'm going to show you guys the trade recording for the first and second trade, and then do the in-depth breakdown and analysis for those trades right after. So enjoy that, and I'll see you guys right after that.
I don't want you give it. Through my blood, my comes inside you, baby. Some kind say she won't solo. Some kind say she won't solo fight. You gotta say, 'cause in the same life she got away. Hungry for strength, hungry for life. No will take your pity. Hungry for strength, hungry for life. No will take your pity. Hungry for strength, hungry for life. No will take your pity. Hungry for strength, hungry for life. No will take your pity. Hungry for strength, hungry for life. No will take your pity. Hungry for strength, hungry for life. No will take your pity. Hungry for strength, hungry for life. No will take your pity. Hungry for strength, hungry for life. No will take your pity. I don't want sex, but you get
All right, so hope you guys all enjoyed that trade recording because I know I did. Now we're gonna get into what I posted within my private side of my Discord in my pre-market analysis. So 12 minutes before market opens, this is 8:18, which is just in Central Time Zone. This is 12 minutes before market open, which is 9:30 EST. Now, going into market open, we can see very clearly here that today I will be hunting longs. To summarize everything here, I said that I will be hunting longs. When we get into the analysis behind it, let's understand why. Reason being, so before we even get into what has happened intraday or like going into New York Open, we first have to reference and understand the higher time frame. The first thing we have to reference when we go into any given power 3, so this one's our daily power 3, when we're going into trading any given power 3, we have to first reference our higher time frame power 3s. So obviously I'm not trading the daily power 3, I'm trading the 30-minute power 3, the 4-hour power 3, but before then, we reference the daily power 3. We understand the development of our daily power 3. But how do we develop bias for the daily power 3? We do that by referencing our higher time frame power 3, such as, well, most importantly, the weekly power 3. But then again, same thing. What do we get bias for the weekly power 3? Our yearly power 3, our quarterly power 3, our monthly power 3. So when we look at the development within our yearly power 3, and we've covered this in previous calls, or in previous lessons on YouTube, but when we started the yearly power 3, what do we see? When we get specific here, we look at our yearly open roughly around here. We see that our yearly opens, we accumulate, and from there we manipulate lower. And this manipulation lower is incredibly strong. You know, it's no minimal amount. It's 6,000 points. And what do we know about manipulation? Well, the stronger the manipulation, the stronger the distribution. And if we have already had our accumulation, our manipulation, what should we then anticipate? Well, distribution. And that is what price is currently within. So again, this is our daily chart. Over the last few months, since April when price had reversed, we have been distributing. So it's been nearly 5 months now where price has just been distributing higher. Every single retracement that we've had has been overran by buy-side delivery. So why should this move be any different? Obviously, we can't just build bias off of that alone. We have to first study even more. We have to break it down in the proper top-down analysis. The next thing we do from there is then analyze the quarterly power 3. Now, when we look at the quarterly power 3, let me just I'm just going to do myself a favor, or I guess do you guys a favor and turn on the 3-month indicator. So yearly open, where do we see that at? We see that all the way over here at the beginning of July. Beginning of July, what do we see? July opens, immediately manipulating lower, and at the end of the manipulation, we look very clearly here, or very closely here. What do you see? You see an SMT with the previous day low, while trading into a daily busy. Now, going to the weekly time frame, I don't actually know if there's anything here. I just want to quickly check. No, nothing on the weekly time frame. We'll get that later on. But when we specifically look at the daily time frame for quarterly power 3, we have, because again, keep in mind here, when it comes to the quarterly power 3 here, we want to see continuation of the yearly power 3. Quarterly power 3 opens on July, manipulate down from SMT to the previous day low inside of the daily busy. And since then, we've just been expanding higher. Again, each retracement has simply been short-term manipulation to play continuation of the yearly quarterly power 3. So now, okay, boom, we have a bullish narrative for our yearly and quarterly power 3. Now, what do we want to see the monthly power 3 do? Play continuation of that. Now, within our monthly power 3, what do we see? Well, August opens, we manipulate down, and specifically we manipulate down into a monthly busy on YM. And QES both fail to do so. It does not need to be traded into simply because YM has already done that. While doing so, we can also see that it's not just a daily or a monthly busy we're trading into, it's also YM running out the previous month low. While NQ and ES both failed to do so, giving us SMT with the previous month low, while YM trades into this monthly BPR, as we can see right here. And that immediately confirms the end of the manipulation within our monthly power 3. And now what do we see? Well, since then, since the end of that manipulation, we have just been expanding higher. So what do you think we want to see within our weekly and weekly power 3? Continuation of that. Now within our within our weekly power 3, the specific one that we're trading this week, what do we see? Well, we see our weekly open, and what we do is immediately manipulate lower. Now, the manipulation lower on NQ was the greatest. YM was YM was a lot, we'll see that YM was a lot stronger compared to NQ and on ES. As we can see at the end of the manipulation, which we're going to cover, YM had exploded and essentially expanded the most, forming not a new all-time high, but immediately running above the high month, and it's already ahead of the curve compared to NQ and ES. And technically speaking, NQ and ES are ahead of YM because YM is still beneath all-time high, but YM just has a clear drawn liquidity, which is the previous all-time high from 2024. Anyways, that overall gives us bullish weekly power 3 development. Obviously, the week has ended and it did not end bullish. We ended bullish on YM, but not on NQ. We ended bullish on YM and on ES. NQ was the weakest of the three, but nonetheless, we can still trade that and treat it like the weekly distribution. Anyways, within our weekly power 3, what do we see? Well, weekly power 3 opens, immediately manipulating lower. YM reaches the NQ reaches the 75% mark of our current August range. So what do we know about ranges? Ranges, we swing grade ranges 25%, 75%, and 50%. NQ reaches, and again, these grades, these 25, 50, 75% marks, they're essentially levels, we'll say. They're levels in which we could see high probability setups form. Now, these levels alone don't dictate a reversal. It's the S&T in which dictates a reversal. But if we form stuff like this, specifically at these levels, you will see a reversal. And there's a lot that we actually see here, and there's a lot of information to deduct. We can see here that NQ reaches the 75% mark of the current August range. ES only reaches the 50% mark. What do we see YM do? Fails to reach the 50% mark, fails to reach the 75% mark, but what we do is hold the 25% mark. All three indices are at a different reference point for the entire August range. That's something worth referencing. There is so many different higher time frame correction correlations here, which are already immediately pointing for higher prices. Because again, our yearly, quarterly, and monthly power 3 are all distributed higher. We want to see the same thing within a weekly power 3. And due to that, what do we see NQ do? NQ reaches the 75% mark. While reaching the 75% mark, there's a few different things to take note of. The first thing to take note of is, we'll make things easier. So technically, you don't identify SMT, the previous week low, on the weekly time frame. But to make things simple, we're just going to reference it. When you see that here, that NQ runs out the previous week low, same thing on ES, while on YM, we fail to do so. Go down to a lower time frame. So boom, we have higher time frame SMT. So technically, that's a middle time frame SMT. So higher time frame, we have SMT, the previous month low, but that's for the distribution of our monthly power 3. Within our weekly power 3, we have SMT with the previous week low, but that's not that is not enough to validate a weekly reversal because it's a higher time frame SMT. We need to see some sort of lower time frame SMT confirm the higher time frame SMT, and we get that through NQ. Or I guess we get that through NQ and ES, both running out the previous day low, while YM fails to do so. Now, the whole reason we didn't reverse back here between Wednesday and Thursday, with price, already having SMT the previous day low, is simply due to the lack of displacement that we had to then confirm the SMT. So Wednesday, Thursday, back here, when we had formed SMT the previous week low, or previous day low, there's no displacement, no expansion to then validate a reversal. And that's simply why price did not reverse where it did. You look at every single, reversal, or every single high probability reversal, we'll say. And I have a really good, right here. This is exactly what I'm thinking of. So same thing back here. So Tuesday, Wednesday, July 1st, or Tuesday, Monday, Tuesday, July 1st, June 30th. Literally the exact same setup. Obviously not the exact same, but the exact same idea with, we already had SMT the previous day low here. So Tuesday, Monday had SMT. You can see that that YM is nowhere near the previous day low. And we failed to expand off of that. We can see that NQ after forming SMT the previous day low, there's no strong displacement, there's no strong expansion. We failed to get that. It wasn't until NQ runs back down again on Wednesday, runs out the previous daily low, forming a new SMT with the previous daily low, that then we displace and expand higher, which then validated a weekly reversal. So the biggest thing you have to look for after, for price forms SMT is displacement, is expansion. And that's the exact same thing that we saw back here. There's no displacement, no expansion after the SMT to confirm that that was going to hold. However, we look back here on Friday when price did form new SMT with the previous day low. What do we see right after? We dig down, we wick below it, immediately reverse, immediately expands higher. 1 hour CISD, 1 hour BSC, perfect. This is displacement, this is expansion. Now we get that on the 1 hour. We get perfect displacement, perfect expansion. Now what do we see on the lower time frame leading up to market open? Well, leading up to market open, ideally, we don't just see price expand hundreds of points before market open. That's not ideal or optimal at all for an entry. The best thing we got here was the fact that leading up to 9:30 open was classic accumulation, classic AMD. So classic accumulation right here. And what do we want to see going into market open? Well, exactly as I posted in my pre-market analysis. Well, accumulation, what do we want to see following the accumulation? Manipulation down. From there, we want to see SMT. Specifically, this is quarterly theory related, sequential SMT. That is simply time-based SMT, whereas regular SMT can be found anywhere, any high or low, doesn't matter. Sequential SMT specifically with time-based highs and lows. And that is what we wanted to see. So going into market open, I stated that ideally New York open drops a little bit, forms some sort of bullish sequential SMT that we can then play continuation off of going into New York open. EQ is not needed to be reached, but it's just a reference point. And anyways, on my chart here, I pointed out the previous day high to be our drawn liquidity. And that was my initial idea going into market open. And what do we see in market open? 9:30. We'll quickly go down to a 1 minute time frame and just show that 9:30 opens, immediately manipulating lower. Now we're just going to stick on the 5 minute time frame here just to keep things simple, because again, my entry on the 1 minute time frame was QT related, and I don't really feel like going over and breaking that down publicly, just because again, I'm not talking too much about quarterly theory on YouTube. I'm just keeping that to the private side of my Discord. Anyways, keep things simple. What do we do is then form SMT with the previous 90-minute low right here and here, while tapping into that 1 hour CISD order block / 1 hour BSC. From there, 5 minute time frame, we then form SMT at market open between the 9:25 and 9:30 low, as we can see right here and here, giving us all the cracks and correlations we need for an entry on the 1 minute time frame. And that is essentially what had been validated the expansion at market open. Market opens, manipulate down, classic lower time frame AMD to play continuation of the higher time frame AMD. So we've broken this down in old videos, and in fact, I'm going to reference that really quick. In one of my older videos, the AMD versus Power 3 one, which I highly recommend checking that out, would be, again, the AMD versus Power 3 one. This is textbook what I explained here. So quickly find where that is. So right here, this is textbook what we just got. Daily Power 3, which is this entire daily candle, Asian accumulation, London manipulation, New York distribution. Now, this obviously the daily Power 3 today was a little bit different, but this overall utilizes the exact same idea. And what do we see right here? Well, this is entirely fractal. 9:30 opens, aka a lower time frame Power 3, plays continuation of the higher time frame Power 3. That is exactly what we just saw right here. Now, this was a little bit more AMD related, to where it was just, it's a mix of both, because this little movement back here, and technically we can just classify this as the 4 Power 3, because our 4 Power 3 opens at 6 a.m, or at least one of the 4 Power 3s, we accumulate, manipulate down, expand higher. However, when we reference time, daily Power 3 opens, classic daily Power 3 development, and then in terms of pattern, we then play continuation of that classic accumulation, manipulation, distribution. play continuation of that going into New York Open. So it's literally exactly what I've taught over a year ago, guys. I mean, guys, I'm trading the exact same concepts I'm trading in a year ago. The only difference between now and a year ago is that I've incorporated quarterly theory to then refine and enhance my trading. I'm trading the exact same stuff. It's not complicated. It's just a matter of understanding and data collection. That's it. It's like I'm trading the exact same stuff. I'm teaching the exact same stuff. All I'm doing is refining what I am teaching. Anyways, this is exactly the exact same setup that we broke down a year ago, that we've now seen today, and technically yesterday. Anyways, that was the overall basis behind the first trade. Now again, as you saw in the recording, unfortunately I got stopped in profit before we took off, and from there we then expanded and then reached the previous day high, which was my TP. Anyways, what we ended up doing from that expansion was then instead leave behind a unbalanced range beneath us, and while also reaching EQ of the higher time frame range. So this entire move lower, we can swing grade that as a range, and Q displaces up, runs above the previous day high, reaches EQ of that range. Also, while YM is running out the external high, which is the previous week high / high of the month. We do that, we reach EQ the range. Logically thinking here, we have to rebalance the range at least partially before we can then validate expansion higher again. So it's a mindset of understanding that before we have to go higher, we first have to go lower. And that was the entire idea. Now, when it comes to specific entries, you have to keep in mind that my entire strategy revolves around divergences, revolves around SMT. If there's no SMT, there's no trade. No SMT, no trade. Keep that in mind. And specifically, no sequential SMT, no trade. What do we see right here? No SMT whatsoever at the highs. So does that mean because we see a down close candle that we're going to short? No. If I was TJR, I'd be yelling at the mic right now, but I don't do that. We do not short without SMT. Down close candles does not mean bearish price action. All we do at this point is wait for SMT to form and then look for a setup to present itself. And where does that SMT form? Well, price runs higher. In terms of foundational ICT, and this isn't really something I look at anymore, but it's cool to see this stuff still happen. The stuff I used 2 years ago. It's like classic 3-drive pattern, 1 drive, 2 drives, 3 drives. And it's like I don't use stuff like that anymore, but it's still cool to see that, 1 drive, 2 drive, 3 drives. What do we see at the end of the 3rd drive? We see SMT. Go for the few candles right here, because again, I take my entry right here. So what do we see leading up to my entry? We see SMT the highs. Boom, boom, and boom. So leading up to my entry back here, my bad. SMT the highs. Again, no SMT, no trade. The only reason I was able to prevent myself from getting chopped up in this price action back here is simply because I waited for SMT, specifically sequential SMT. Due to that, I was then able to then pinpoint when price was going to reverse. From there, I then entered off of the next 1 minute CISD. Now, 1 minute time frame, we zoom in very closely here. We can also see that there was a crack and collation with the previous 1 minute high. As you can see right there and there. From there, looked and entered off the next 1 minute CISD. Now you saw in the video, I got a little bit of a late entry. Only reason I got a late entry is simply because it all happened so fast. So what I would have initially liked to do was enter there, stops at the high, off the initial CISD, and TP at whatever put me up $1,000 on the day. Now again, for those who watched the video, you might have seen that my take profit wasn't my actual drawn liquidity. My drawn liquidity was the 25% mark. That was the bare minimum that price should have reached for the day. Because regardless if we're going to go higher or lower for the rest of the day, rest of the week, we should at a minimum rebalance some of the range below us. Due to that, 25% mark of that range was the minimum that I was drawing to. But anyways, that was my initial entry. And from there, all I did, my bad, was what I was referencing was that $1,000 per account was my target on liquidity, because by reaching that, I was then able to stay within my 30% consistency rule with Apex's payout rules, and two, reach the payout threshold to even withdraw $2,000 per account in the first place. So that's why I was only drawing for $1,000 per account, simply because I was just trying to lock in my payout. Anyways, got a late fill because again, it happened too fast. Doesn't matter. I properly managed my risk. Stops at the high, TP at whatever, put me up $1,000 on the day, and that was my initial entry. However, I made a emotional decision, and this goes against what I talked about in either one or two videos ago. I was talking about how going into every single trade, you have to set up a predefined plan. You set up a predefined plan by knowing your entry, knowing your stop loss, knowing your TP. But when it comes to a predefined plan, you also have to understand your risk management. When you're going to go break even, when you're going to partial, when you're going to cut your position. And my plan for this trade was, as soon as we run out this swing low on any of these three indexes, I will then go break even. However, NQ entering liquidity right above this low, I just saw displacement. I won't break even way too soon, because again, I'm so concerned with trying to lock in my payout that I'm not entirely thinking straight. Obviously, I'm thinking logically in terms of looking for a valid setup, because I would have been fine waiting until next week to get a trade, but nonetheless, I'm still a little bit concerned at the back of my mind that price, with how strong the expansion was, we're going to see a settle fail. And I just improperly managed my risk. I broke my rules. I did not follow my predefined plan. I got break even by a singular tick. A singular tick, and then like literally by a tick. My fill was probably like 1 point lower. It ticked me out and taking me break even. And after I saw that displacement lower, I'm like, are you serious? I was annoyed with myself. I was annoyed that I made a dumb decision, and I wasn't thinking emotionally here, because none of my initial confluences for shorts were invalidated. We're still holding quite literally everything that had initially made me want to enter short in the first place. And due to that, all I did was simply re-enter as price was displacing back lower. However, this time around, the biggest concern was that my stop loss was not going to be protected. So I had to play a high risk position, stop loss at this swing high, even though it's a high that just stopped me break even, stop loss at that high, and then again TP at whatever, put me up $1,000 on the day. If I truly wanted to protect my position, I would put it at this swing high here, but I had to play not a gamble but a risk. I just had to accept the risk, put stops at this high, because again, that's the only reasonable risk I can put on given myself, because again, I'm in with 1 mini per account. Nearly a 20-point stop loss is about $350 if I were to be stopped out, and that's per account across 20 accounts. That's a significant amount. I'm just trying to lock in my payout. Anyways, that's the overall thought process behind my first and second entry. Had I just followed my initial plan on my first trade or my first entry, then I would have been completely fine and no worries at all. But again, I'm just giving you guys some reality behind trading and all that. And a big question I have in regards to how I treat my Apex accounts compared to other accounts is simply, when it comes to Apex accounts, I'm always focused on the low-hanging fruit. And that's specifically when it comes to my first and second payout. My first two payouts, I just want to lock those in, confirm that I was able to pay off how much I invested into these accounts. So the evals, the activation fees, all that. And then on top of that, also to lock in what would potentially be future eval fees and activation fees for potentially future accounts. And that's just kind of my thought process. And then of course pay off whatever taxes that I'd have to pay on those payouts. Anyways, that's what I do for the first two payouts. Any payouts after that, I start trading a little bit more aggressively, and just overall just focus on my normal trading, mainly because I'm past the trailing drawdown, so that's no longer a concern. So I can now hold positions longer without concern of trailing drawdown. Anyways, that's a general breakdown of today. If any questions, comments, concerns, please feel free to list those in the comments below. Otherwise, I'll catch you guys all in the next video.